Uh, yeah, while the lecture is on, please mute your mics. But whenever you need to ask any question, please unmute your mic and ask the questions. Today by 8:45, I'll be stopping the lecture because I had to rush to the airport. Next week, I'll be out as a result. On next 2 days, I'll not be available. Mr. Saman will cover the next 2 lectures. Thereafter, I'll be available again. Right? Saying that, I would like to share the same document which I shared that day. Yeah. I think you all may have received this note because that day I have forgotten to share the full note that today I think CMA may have shared it. Right. In the previous day, as I have limited time, we will just run through the things what we did in the previous day, then we'll move to the current, today's session. Right. Right. Yeah. Previous day, we discussed the tax exemptions under business income as well as tax exemptions under the investment income. As I explained, under the business income, I have given a detailed note, and in addition to that, I have prepared a small summarized note. In the summary also, I have given all references. If you need to refer the original act at any time, you can refer it at any time, right? With these references. Normally, all these exemptions in the current law, the exemptions come under third schedule. Therefore, third schedule, those related places I have mentioned. In addition to that, there's one item under section 9, right? That is with relate to the strategic development project. It is recognized under section 9 of the Inland Revenue Act. All the other things are under third schedule, right? We discussed these things, but when we take most of take these items, only very few items are available, exemptions are available for tax resident people. One is strategic development project is open for tax residents as well as non-residents. Then when we take the other things, the leftovers are mainly for non-residents. Now this supply to Sri Lankan airline by non-residents. Then handling construction projects and all projects by non-residents, which the projects are 100% financed by foreign grants by the government, through the government, that is open. We'll take only the open items. There's another one open, non-residents laboratory and standard certification service. Again, that is for non-residents. Then that's all. Now, hardly any exemptions, right? Now, when we compare the Asian countries, I think we are the highest taxing country in Asia. More in our region, we are the highest and also the lowest exemption available country, right? As a result, now it is very difficult for us to promote overseas investors to Sri Lankan projects because normally they expect various tax holidays, exemptions and all. Then we discussed about the investment income category. For that, the table we discussed that also some of these things, there are few items for locals. Mainly, foreign currency deposit interest income are exempted. Then the dividend income, which is subjected to 15% withholding tax, dividend tax, is exempted to the even resident people, right? Now, the dividend, the second one, to any member out of dividend received, any person, when we received, as the dividend tax has been already deducted, no more tax on that, right? Then dividend and disposal gain, if you have any shares in overseas shares, then when we are receiving dividend from that overseas companies, as well as when we dispose those things and bring the money to Sri Lanka, all these are exempted. That is also available for locals also. Then charitable institutions' interest income is exempt only if that charitable institution is utilizing that money for the purpose of in-house caregiving for elderly children, elderly people, or disabled people. Then the interest income by overseas lenders to any person in Sri Lanka, that interest is exempted. Then interest earned by any person on any foreign currency, but these are foreign currency deposit. When it comes to foreign currency deposit, even we, the resident people, also can enjoy. Next one also foreign currency. Then we learned the welfare societies, any interest income is totally tax-free. No conditions for that. Then for multinational companies, if they'll retain their money without just remitting money and utilize that money for the purpose of future imports, right? Then the remittance tax exemption is there, right? And also, interest earned is exempted on that. Then we learn non-resident persons foreign currency deposits, then interest or discount in government sovereign bonds, then realization gain of international sovereign bonds, the government sovereign bonds, then interest and discount earned by Samurdhi development banks. Those few exemptions are still there. Then we learn about the waiver of penalty during that there was a delay of legalizing, and as a result, they gave a concession on that. Then exemption on other receipts, certain other receipts exemptions are there, mainly when any person receive funds from President Fund or Defense Fund, that is totally exempted on that person. Then there's another exemption for corporations. When a corporation receives voted funds from Parliament through consolidated fund or any loan arranged through the government, that is a capital investment, therefore it is tax-free. Then for remittance tax, there's an exemption. Suppose a non-resident person retain money in Sri Lanka without remitting that money and keep that money for a period of minimum of 3 years, retained in Sri Lanka, then in that case, the remittance tax exemption is there for them. Then COVID-19, that is the last item what we wanted to discuss, but that day I couldn't discuss properly. COVID relief, IT relief on COVID-19 economic recovery special tax relief. Under this, there's an exemption, right? Now, the first two items, as I mentioned, first two items are for SMEs. Now, first one, here the exemption in the sense it is Commissioner General shall write off, right? That is, it's an order to the Commissioner General to write off any income tax arrears payable by any SME if such arrears arise due to any assessment made up to year of assessment 31st March 2019, which is outstanding as at 26 February 2020. Right. That means this is the period not after 31st March 2019, but at the same time that outstanding amount should be outstanding as at 26 June 2020. Even for that date, it should be outstanding. Then for SME, you know SME, there are three main conditions. SME, it has to be a business carried out in Sri Lanka. Then shouldn't have associates, and annual turnover should not be greater than 500 million. But subsequently they amended, even you have an associate, if when we amalgamate all these associates together, if the turnover is below 500 million, then again you can enjoy. That is SME. There are three conditions. Then those SMEs hold outstanding taxes based on assessments. Then there are conditions if such assessment was made as per the provisions of this act or the provisions of former acts, but subject to deduction of any refunds. Now, suppose I have some outstanding taxes. When they are writing of this, if there are in another year, there's a refund due to me, first they set off the refund against that money which I owed. Then only the leftover is the thing what they are writing off. Then the second one. Give me a minute, please. Yeah, we'll see the second one. Subject to sections 136, Assistant Commissioner shall not amend. First one, they are write-off. Second one is not a writing off thing. It is the IRD can't, under this IRD can't amend any self-assessment return. Can't amend self-assessment return mean they can't issue assessments. They have to accept the self-assessment return. Which self-assessment return? Now we'll see. Self-assessment return under the provisions of section 135. Now these assessments are issuing under section 135, right? That means if once they stop issuing assessments under section 135, that means there won't be any other assessments, right? IRD can't issue assessments under the section 135. For what? Where the assistant commissioner is satisfied that there's no fraud or willful neglect involved in the disclosure of the income tax return or any deductions or relief by such SME person. Now, this section is applicable only for the year of assessment 1920 only. This section is valid only for year of assessment 2019-20, not for any other year, only for 2019-20. 1920 only. 1920. Then number 3, the Commissioner General shall not impose any penalty. That one, the third item is not only for SMEs, but also for any person. Right? The third item is not only for SMEs. It is available for any person, even non-SME people. Even non-SME people. Right. What it says? Commissioner General shall not impose any penalty. That section covers only the penalty. That section covers only the penalty. Or initiate criminal proceedings. Or initiate criminal proceedings under this particular chapter against a person who files the return of income for the year of assessment 2019-20 before 30th June 2021. If the return 1920 return is filed on or before 30th June 2020. Why? This is that COVID season. Therefore, they have given some more extension for that, but this extension is valid only for charging of penalty. Only for charging of penalty. Right? Then next, make the payment, right? Not only filing itself won't help. In addition to the filing, they have to make the payment of tax payable on assessment. Referred to in section 82.2, that is 1920 tax to be paid on or before 30th June 2021. Right? Then the exemption is there only for penalty, not for any other thing. That means you have to pay tax, then Commissioner General won't charge penalty. Right? Now, some people says this is not much encouraging act. Right? Because you have to pay tax, then only you are safeguarded with penalty charge. Right? You are safeguarded with penalty charge. Right? Then, remarks, I have given some remarks. As for the post-COVID economic recovery special provision relief section, unless the assistant commissioner is in a position to prove that a fraud or willful neglect involved, the commissioner general and the assistant commissioner refrain from taking assessing and recovery actions. Both action of recovery, right, and taking assessing. They can't assess, they can't take recovery actions, right? They can't take recovery actions also. Right, that's good. They can't take recovery action. Right. Then, by SME people. Now, SME people are well covered with this section. Right? SME people are covered. Then, the subsection 3 covers not only SME, but all other persons. As I explained, even other persons are covered with that section. Even other people are covered with that section. Now today, we'll move to other concessions. Right? we will see what are the other concessions available. What are the other concessions available? Right. Other concessions granted with relate to income tax. 6.1. Enhance capital allowance on the cost of depreciable intangible assets. Now, this enhanced capital allowance is a very attractive thing, on depreciable tangible assets of a new business for the year it incurred and used. Right now, this section is very attractive section. Now, in addition to the normal depreciation, capital allowances, any business who is qualified under this section can get attract for this thing called enhanced capital allowance. It is enhanced. That means over and above the normal depreciation, you are getting this. Now in Sri Lanka earlier, governments used to give lot of tax exemptions. But during couple of years, they stopped some of these exemptions. Now this section is to promote investments. Now, when these people invest, they get enhanced capital allowance. Once they get enhanced capital allowances, in the year they get the enhanced capital allowances, there will be a huge tax loss. But as per our law, you can carry forward the tax loss for next 6 years. Therefore, you can enjoy a lot on this. Now, these enhanced capital allowances are available under 2 schedules, 2nd schedule and the 6th schedule. As you know, normal depreciation is under the 4th schedule. Now, this is under 2nd schedule and 6th schedule. There are 4 conditions to be fulfilled. For you to be entitled for this, there are 4 conditions. One is that has to be a tangible asset. Not things like goodwill and all. Then the second thing, this thing has to be a new business. They have not used the word new company. The word what they have used is not new entity. New business. What's the meaning of that? Even an existing company can launch a new business and enjoy this. You need not to have a new company. Then the third, year it incurred. This benefit is there for the year you incur the cost. Incurred, not paid. Keep in mind, the word here is not paid, right? The word is incurred. Right? This incurred. Incurred is different from payment. And now all these conditions should be fulfilled. Because and used. You have to use it. Right? Now there are 4 conditions. If you will fulfill these 4 conditions, you are getting the benefit. It has to be a tangible asset. It has to be a new business, not a new entity, but new business. Then it has to be in the year you incurred, you are getting the benefit. Right? Then at the same time, you have to use it. Now the problem, certain projects, there's a lengthy time period which takes for implementation, setting up period. Right. In a situation like that, subsequently, they amended the law after realizing that the amendment now incurred and used both might not happen in 1 year of assessment. There may be a gap between the incurring and the using. Therefore, they allow 3 years grace period, 3 years period for you to incur the cost. Then to use it. 3 years. In this case, a 3-year project implementation period computing from the first date of investment on depreciable assets has been allowed to charge the enhanced capital allowances by 2022 amendment. Subparagraph 6A, second schedule, for your easy reference I have given. Note that intangible assets are not covered. Are there any questions? Right. I'll speed up a little bit because I had to stop by 8:45. On new investments in depreciable assets or shares of state-owned companies, if cost incurred on such assets used in Sri Lanka exceed 250. Now, these are sub-items of 6.1, sub-items. To whom we are getting and what are the criteria? Now, if on new investments in depreciable assets or shares of state-owned companies, if the cost incurred on such assets used in Sri Lanka exceed 250,000 US dollars, that is 150%, 150%, exceed 250,000 US dollars, 150%. 612, on new investments in depreciable assets that are fixed of any non-state-owned new businesses, of any non-state-owned, the private sector ones, right? In that case, now we'll see, in the case of BOI companies, even expansion is qualified. The expansion is qualified only in the case of BOI companies. Any non-BOI company, expansion won't do. It has to be a new business. Then, what are the allowable limits? If the assets used in northern province, Jaffna area, if the assets are used in northern province of Sri Lanka, if the total cost of such assets exceed 3 million, then 200%. In addition to these things, I have forgotten to tell in one place, that are fixed to. Now later they realize that, yeah, that is, I have given here in the second one, this one, that are fixed. That means this asset to be fixed to somewhere. Otherwise, our people, they misuse it. They will say one party, one company is having now, 2 companies are there. One company is having in the same group. One company is having a garment factory in Colombo. Then they incorporated another, because they want to do another garment factory. But when they are going to do another garment factory under the same company, it is not a new business. It is the existing business. If it is not BOI, they can't do that. As a result, what they did, they incorporated another company to do the businesses in Jaffna area, northern province. Now, after starting, they imported machineries and various items, depreciable items, and send it to Jaffna factory. After that, they bring it and ship to another factory. To stop that, they have included the word that are fixed. But still, you can do that. Fixing mean even if you put a nut and bolt, you are qualified. Right? Right. If this project is in northern province of Sri Lanka, if the investment exceeds 3 million US dollars, you are getting 200% exemption under second schedule item 1.4. If the cost of such asset does not exceed 3 million US dollars, does not exceed 3 million US dollars, again you are getting 200% if it is in Northern Province, 200%, but under 6th schedule. Keep in mind this 6th schedule was there only for a very limited time period. It was there only for a very limited time period. During that time period, we were entitled to claim that. Then assets used in other areas, lower percentage. If it is any area other than Northern Province, then if the cost of the asset exceeds 3 million, but up to 100 million, 3 million to 100 million, 100%. 3 million to 100 million, 100% enhanced capital. If the cost exceed 100 million, 150%. Both are under second schedule. Then if the cost of such asset does not exceed 3 million, under 6th schedule, during that limited time period, you were entitled to enjoy 100% tax, the capital allowances, enhanced capital allowances. Now in the first year, suppose your enhanced capital allowance rate is 100%, and if it is machinery, you are getting 100% here, again 20% under the normal capital allowances. First year, you are getting 120. Second year, only 20. Third year, 20. Fourth year, 20. Fifth year, 20. At the end, you have claimed, instead of 100, you have claimed 200. Right. But when you dispose the asset, to calculate the gain on disposal, you need not to consider the enhanced capital allowance claim. You have to take only the normal capital allowances. Okay. Are there any questions?
Can we claim only foreign payment or in Sri Lanka rupee?
No, any expenditure which meet these four criteria. Tangible, depreciable, tangible asset. It has to be a depreciable, tangible asset. That business has to be a new business to that entity. Now, garment factory, garment sewing company can start an embroidery unit. That is a new one. Or they can start a printing unit. Or they can start a textile weaving unit. Those are new businesses. Then incurred. Yes, you have to commit or you have to pay, or even on credit terms, you have to buy the machinery. Incurred. Then you have to start using. This incurring and starting using, in between these two, there can be maximum of 3 years time gap. Okay. Are there any other questions?
So excuse me,
Yeah, please.
now with these enhanced capital allowances, government is losing a lot on this. What is the actual idea of this? Giving this?
Government, as a country, it is really benefited to the country.
Only the revenue, inland revenue is losing.
The revenue, no, government revenue might come down immediately. Right? Now, what has happened? Now, some time back, I was doing lot of investment promotion businesses. Maybe till about 2015, I was doing so many BOI approvals, investment promotion thing. But if I'll see from 2015 to today, nowadays we won't get any BOI project newly. Why? Nobody is investing in Sri Lanka because now whoever who has money, an entrepreneur, is investing for what? For profit. Now, when Sri Lanka is charging 30% tax and 15% dividend tax, 40.5%, there are so many other countries in this region where the total tax rate is around half of ours. If they'll go to Dubai, it's very much lesser. Very much lesser. Right? Now, with this situation, now you can't catch a fish without giving giving something, no? Therefore, now, without giving incentives, foreigners will not come. Now, next thing, we have to see whether, as a country, whether we can survive without foreign investments. Now, what has happened to these governments? These 2-3 governments. They couldn't realize the importance of these things. Actually, sometime back, they realized. And everybody were criticizing these tax holidays and all. But after stopping, what has happened? Now we are begging overseas investors to come to Sri Lanka. Government is begging the people, inviting people to come to Sri Lanka. But without giving concessions, they will not come. Now only hope was Port City. Now that is also over, no? Now there won't be tax holidays under that anymore. Then I think we have to keep the Port City as it is, as a playground or something like that. What else to do? Just the additional land, that's all. Without giving incentives, you can't do these things. Incentive in the sense, not only income tax incentives. Not only income tax related, but the facilitation. Now, with the barriers of investing in Sri Lanka, people are not happy to invest in Sri Lanka. A lot of barriers are there in getting the approval. If you have to get environmental approval, it takes years. By that time, most of our investors, they vanish the country. They go and set up their things in an easy country. Therefore, without giving something, you can't get anything. But I think up to now, rather than just giving blanket tax holidays, earlier under BOI law, we were just giving blanket tax holidays. Luckily, we stopped that and offered this type of investment-backed tax concession. Now, they can't get this benefit unless they invest it. At least then the investment is there. Now, earlier, we were just openly giving. Now, at least this is there. But now, both these are almost expired. That is the problem. Now expired. Now we'll see next items. New amendments to 6th schedule. Now those are the recent amendments with relate to this 6th schedule recently amended, the subsequent amendment. Now we'll see. Repeat the paragraph 2, assessable charge. Anyway, the enhanced capital allowances, the claiming of enhanced capital allowance is not badly affecting for your assessable charge. When you dispose it, that won't badly affect. That is, earlier, the legislators were not understood it properly, but subsequently, after understanding, they amended it. As a result, from the beginning, they amended. Therefore, even you have claimed 200% or 300%, you need not to worry about those things. Only the normal capital allowances is the thing to be considered for calculating of gain of disposal. Then enhanced capital allowances shall be expire 6 years. After this, under the 6th schedule, all enhanced capital allowances under 6th schedule, expires after 6 years. Originally, it was 3 years, right? Now, subsequently, they extended that time period for 6 years. specified rather than saying specified, I can say 6 years. That may be easy. Anyway, I have given that in my note. Originally, it was 3 years. Subsequently, it is increased to 6 years. Then the eligibility period of additional deduction of 100% research and development that day we discussed, that you are getting another 100% deduction. Now, originally it was 3 years, subsequently increased to 5 years, that we discussed earlier also. Then the interest payable by a taxpayer on delayed tax payment under section 159 during that period, 1st March 2020 to 30th September 2020. This is odd date, 1st March. That is correct. 30th September 2000 has been removed. That means they have applied 0%. If paid on or before 1st October 22, no interest. Then in addition to the normal deduction under section 15A, an additional 100% deduction is given for marketing and communication expenses. Now that one incurred during 3 years. Originally they said 3 years, but they limited it to 2 years. Those are the amendments. Are there any questions? I'll move to the next one. Withholding tax exemption on dividends to non-resident. Now, only one exemption is there. If a non-resident person invests more than 1,000 US million, 1,000 million US dollars, huge investment. Still, this exemption is there. When this company declares a dividend, then that dividend is tax-free. No 15% dividend tax. But the problem, investment criteria is 1,000 million US dollars. Then 6.3, expatriate employees income tax exemption. Right. Expatriate employees income tax exemptions. Now this one, expatriate employees income tax exemption. We better see that also. Remuneration, now in this 1,000 million US dollar companies, when a non-resident person works in that salary is totally tax-free. No APIT on that. Understood? On this, no APIT is there. That's a big advantage for them. That's a big advantage to them. Right. If you have any questions, you all have to ask. Then we'll move to the next area, computation of taxable income with required breakup of an individual, partnership, and company trust. Breakup. Now, sometimes the taxable income, part of the taxable income may be liable at a higher rate. We'll say 45%, or certain things may be liable at 30%, certain things may be liable at 15%. Now, still, there are 3 rates, no? 15%, 30%, and 45%. If one company is having all these 3 types of incomes, law says you have to prepare in accounts in such a way to identify the assessable income and the qualifying payments, and also relief on the individuals separately for those categories. Separately, you should be in a position to identify. Then with the 2021 amendments, it is reintroduced the concept of taxing the income of different nature at the rate applicable to those nature of incomes by moving out from the concept of one flat rate on the total taxable income of the company. Right. But even it says one flat rate, Now, no one flat rate. Now, even at present, we have 3 rates. 15, 30, 45%. Since 1st April 2018, to apply the concessionary tax rate of 14%, at that time we had concessionary tax rate. Most of the income of companies, there was a requirement, I have mentioned most. There are some cases, this is not applicable. Requirement of predominantly engaging in that business. However, with the 2021 amendments, said predominant requirement is abolished. That is abolished. As a result, the requirement of separate preparation of taxable income of different nature activities, activities or businesses has arisen. If we are having liquor manufacturing or cigarette manufacturing or gambling business, you have to separate that. If you are having overseas service export business, you have to separate that. Likewise, you have to separate these things. If you all have any questions, please ask. Next, tax rates applicable to different taxpayers. Now we know individuals' tax rates, we have already discussed earlier. We discussed the individual's tax rate, right? Then, income tax rates of individual. For the applicable rates, please refer paragraph 234 above. 234 above. Then income tax rates of companies. Now we will see company tax rates, right? First schedule, company tax rate. What are the items? Income tax rates, we can divide this into 3 categories depending on the time period. Year of assessment 1819 and 1920, but 1920 only up to 31st December 2019. That period. During that period, we had 10% tax rate on capital gains, 14% tax rate on SMBs and certain qualified sectors, then 28% standard rate, then 40% betting, gaming, liquor, tobacco businesses. At that time, manufacturing and sale or import and sale word was not there. At that time, it was covered any business, even a liquor shop by the roadside liquor shop were liable at the 40%. But after that, they realized those liquor shops are getting very low income, low profit margin. As a result, they limited this higher tax rate only for the people who are, in the case of liquor, tobacco, who are either import and doing the trading, the importer, then only the manufacturers. Only those 2 categories now liable at a higher rate under liquor and tobacco. Then the second period, year of assessment 1920 to 22-23, 1920 only first 3 months, then 22-23 up to 30th September 22, 6 months period. Then SME, 14%. Business of sale of merchandise, including exports, where the proceeds are getting in foreign currency, 14%. Specified undertakings, certain specified undertaking, this category, there was, I have given the definition also. It is covering only the international trading related activities. Then education, promotion of tourism, construction services, agro-processing and healthcare, 14%. Dividends received from resident company, 14% at that time. Now it is 15. Then supply of health protective equipment and similar products by BOI companies, instead of export, if they supply to Ministry of Health, Sri Lanka Army, Sri Lanka Navy, Air Force, Sri Lanka Police or COVID centers, this is as a result of COVID. Then gain and profit from consideration received in respect of gem and jewelry. At that time, they had a lower rate. Then company which lists Colombo Stock Exchange, they offered 3 years tax holiday, but government broke the promise. They limited it subsequently. That's a usual thing. Normally, all governments are breaking their promises in Sri Lanka. Then 14% tax rate on supply of electricity generated by using renewable energy, like hydro, solar, wind and all. Then manufacturing entities were enjoying 18% tax rate. Then conducting betting and gaming, higher rate 40%. Then, as I mentioned, manufacturing and sale or import and sale of liquor and tobacco, 40%. On investment capital gains, 10%. Then on all other things, 24%. Actually, when we see these tax rates, it's really investor-friendly tax rates. People are criticizing, that's true. But what was the aim? To get more and more foreign investment. Second, to give more and more employment opportunities. Main ideas were those two. Getting more and more investment from overseas, FDI, then the employment. Now, subsequently, people couldn't understand the practicability of these things. They thought short time money. Short time money. Now, as an example, this export of services. Government wanted money. They put a tax rate just to satisfy IMF. Now, what has happened? Almost all IT companies have already vanished the country. Earlier, at least we were getting this foreign currency. Even no income tax, we were getting the foreign currency. Now what has happened? No tax, no foreign currency also. Right? These are short-sighted decisions, short-sighted decisions. Right? It is badly affecting to the economy of the country. Right? Then, luckily, for the time being, we are enjoying a good tourism, because there was no any bomb blast or any incident like that. Suppose something happens, what will happen? That also will die that business also. Right? Then new tax rates. From 2022-23, that is from 1st October 22. 1st October 22. Betting and gaming, business income, they increased to 45%. With effect from 1st April 25. Then manufacture and sale or import and sale of liquor tobacco, they increase up to 45% with effect from 1st April 25. Then service exports, earlier totally exempted, they put 15% tax on that. Then all other businesses, 30% tax rate. That's good. 30% and 45%, okay. But there has to be concession rate and tax-free items like service export. Right. Now, are there any questions? Yeah. Are there any questions? Then I'll explain a little bit some interpretations. SME interpretation. As I mentioned, there are 3 things. Business solidity in Sri Lanka shouldn't have an associate entity or shouldn't have an associate entity where the group turnover is less, more than 500 million. Then the annual turnover should be less than 500 million. Right. Then however, with effect from 1st April 2020, even it has associate entity, if the aggregate annual turnover is less than 500 million, can enjoy SME benefit. Then agricultural business. That's a definition for agricultural business. The business of providing agricultural, horticultural, or animal produce, and includes an undertaking for the purpose of rearing livestock and poultry. That is agricultural. The business of agro-farming or agro-processing, but excludes farming. That also part of this. Business of agro-farming and agro-processing. But under the agricultural business, the processing, the further things are removed. Certain things are removed, but exclude farming of or processing of liquor, tobacco products, or products as the case may be. Right. Those items, liquor and tobacco related items, are anyway, even those are agricultural based, those exemptions are not there. Then agro-farming and agro-processing, it is explained in section 195. We have already discussed that earlier. Then export includes specified undertaking. Unfortunately, our law, the legislator was not capable enough of giving a definition for export. As a result, our Inland Revenue Department create a havoc on this, right? Now, when there's no definition, we have to follow the common dictionary meaning. But they have created their own version and trying to argue on that. There are some cases which has gone up to the Supreme Court level. We are waiting for the judgments of those things. Export, that means anything which is leaving out from a country's port is an export, leaving out from a country's port. That port may be airport or maybe seaport. The meaning of export is that. But our IRD says, no, to be an export, there should be a destination country. There should be a destination country. I don't know from where they got this nice argument, a silly argument. Anyway, with this argument, now some people, they have gone up to the Supreme Court level. We are waiting for the judgments. Specified, this is what's happening in Sri Lanka. When the law doesn't interpret words, sometimes our IRD try to interpret on their own. They feel that this is their job. It is not valid. Right? Their interpretation is not valid. They can give interpretation as a ruling. It is up to us to accept it or not. If you are not happy with that ruling, no problem. They are binding with the ruling, not us. Therefore, only relief is the court judgment. Now we have gone up to that level. Then specified undertaking, as I mentioned, it is something to do with the international trading. Now see, interport trading, offshore businesses, service export, headquarter operations, logistics services, transshipment businesses, freight forwarding, service to exporters, production or manufacture and supply to exporters of non-traditional goods. They are non-traditional goods. Some gazetted services, there are few gazetted services also, and sale of gem and jewelry in foreign currency. All these are covered with this. Next, educational services, not defined and hence should apply the dictionary meaning. Then definition of an associate. Definition of an associate. There's a lengthy definition, lengthy and complicated definition for the associate in the Inland Revenue Act. As I mentioned earlier also, one of the most difficult section to understand is this definition. One is the definition, the other one section 69 and 70 with relate to the residency. Residency also section also, the wordings are not straightforward and not clarity, right? Not up to the level. Right. Anyway, I'm not going to read this. We discussed that also. The first part is relating to mainly to individual, not only for individual, because it is under C, an entity and person is also there, but other things, individuals. The part B, mainly for entities, right? Please read this leisurely and try to understand, right? Then when we take a relative, the word relative includes so many relationships. Individual child, spouse, parent, grandparent, grandchild, sibling, aunt, uncle, nephew, niece, or first cousins, not second, including by way of marriage or adoption. All these are covered. Now we will move to partnership tax rates. Partnership tax rate. Now, when we take the partnership tax rate, originally, now still, partnerships capital gains are taxing at 10%. Capital gains are taxing at 10%. Why? Ultimately, individuals are getting that. As that is the. Then allocation of partnership profit, once we had on allocation, we had a tax rate. On allocation, 8%. Now they abolish it and they introduce income tax on partnerships. They introduce income tax on partnerships. Nominal income tax on partnership at the rate of 6%, then give the credit to the individual partner. Now with effect from 1st January 2020, no tax on distribution, allocation. There's a nominal tax on the profit. Now, on gain on realization of capital gains, 10%, investment capital gain 10%. Then out of the balance profit, first 1 million, 0%. Excess of 1 million, 6%. Excess of 1 million, 6%. Then we'll move to trusts. On investment capital gain, continue to be at 10%. Then we had different rates in different times. Up to 31st December 2019 on other income 24%. Then 1st January 2020 to 30th September 2022, 18%. Then 1st October 22 onward, 30%. Service exports and service overseas income received in foreign currency through banks. Now they newly introduced 15%. It's a killing thing to our service export industry. Right. Lucky that the government won't feel it because our tourism is doing well at present. Therefore, government is getting some foreign currency. The export volumes, the dollar value wise has come down, and service exports have come down. Now we will move to unit trust and mutual funds. Sometime back, these unit trust and mutual funds were enjoying some concessionary rate. Anyway, they continue to be applied, continue to be taxed at 10% on the investment capital gains. Then on other profits, up to 31st December 2019, it was 28%. Then 1st January 22, 30th September 22, it was 24%. Then on other taxable income thereafter, now it is 30%. Now, service export is there, there's 15% tax rate. Then we'll move to charitable institutions. Again, the capital gains taxing at 10%, no change. On all other income, from the very beginning, 1st April 2018 onward, it is 14%. Right. Next, NGOs under our law, NGOs comes under company category. NGOs comes under company category, right? As a company, but NGO rates are there. On capital gains, 10%. Even it is a capital, even it is an NGO, they can enjoy, even it is a company. If it is an NGO, they can enjoy 10% capital gain tax rate. On other taxable profits, up to 31st December 2019, the rate was 28%. Then 1st January 22 to 30th September 22, the rate was 4%. Then thereafter, rate increased to a flat rate of 30% as in other cases. Then on service export, newly introduced this 15% tax rate. Newly introduced the 15% tax rate. Then income tax rates of ETF, provident or pension and termination funds. What is this? ETF. Yes, in Sri Lanka, there's an entity called Employee Trust Fund. What's their tax rate? It is flat rate of 14%. Flat rate of 14%. Only thing, no mentioning on capital gain tax rate. There's no mentioning in the law. Right? There's no mentioning in that. Right? Then ETF, their profit is 14%. Then provident funds, any type of provident funds or pension funds or termination funds, the tax rate is 14%. Then that is not changed from the beginning. Only missing item here is, the tax rate for capital gain. They have overlooked to put that, right? Then capital gain, there's a question, right? They have not mentioned. They could have to mention it, but that hasn't happened. Now, even in an earlier case, now this NGO, that is covered separate. But for EPF, ETF, also there may be capital gains. No? Sometimes there may be capital gains. Then what's the tax rate? They have not mentioned. Now, when they have not mentioned, there's a problem. Now, some people are arguing that the rate should be 10%. IRD is arguing, no, rate should be 14%. 14%. Then remittance tax. Remittance tax. Right? Remittance tax. What is remittance tax? When we remit some money, out of the country, we remit some money overseas, then the tax rate, there's a tax rate of 14% on that. Actually, government, IMF is pressurizing the government to increase it to 15%, saying that world common tax rate is 15. Anyway, yeah, if they'll pressurize the government, they will increase it. On remittances, on what we have to pay? On remitted profit of a business. On remitted profit of a business by a non-resident person. When a non-resident person remit a profit of a business carried out in Sri Lanka, under section 62, it is liable to remittance tax at 14%. Can somebody tell me an example of remittance tax? What type of entities are paying remittance tax? Can somebody tell me? Yeah, one example. Remittance tax example. What type of companies are paying?
BOI companies.
One answer, BOI companies. I'm not saying that it is correct. One answer, BOI companies. Any other views? I didn't get
Foreign companies, yeah.
foreign company. Yeah, up to a level, it looks like correct, but not complete. Can you elaborate it?
the foreign companies, where the mother company is located in another country, where the subsidiaries in Sri Lanka. So when they remit from here to there, is it?
Can't they deduct, in that case, can't they deduct dividend tax? If it is a situation, aren't the dividend tax applicable for that? A local registered, locally incorporated company. 100% owners are foreigners, shareholders. Now, in that case, aren't there dividend tax? Is it applicable or not? Anyway, you have done a good try, but it is needed a little bit polishing of your answer. Because I asked this question as your answer is not 100% complete. That is why I asked this question.
So how about management fees and administration fees paid to a parent
Management
company?
Registration fees, there's a withholding tax of 14%. When we are paying management fee and things like that to a non-resident person, we have to deduct 14% withholding tax, or if the double tax treaty says a lesser amount, that amount we have to deduct. That is also not correct then. What else? Yeah, try. Yeah, I have a little more time.
Which means when they are transferring money as some financial assistance, not as dividends or management fee, whatever, as some financial assistance or the loans, is it?
No. That is also not correct. Yes,
The
overseas, yes, that's correct. But investing in which type, which way?
joint venture, sir.
No. Yeah, some joint ventures may be paying remittance tax. What type of joint venture? I think some of you all may have worked in that type of companies also. At least in this batch, there may be 1 or 2 people who work for this type of companies. I'll give the answer. Anyway, everybody tried something. Right. Answer is overseas companies registered in Sri Lanka. Now we know some of these Chinese company, Indian and various other country companies. Sometimes they come and incorporate a company in Sri Lanka. In certain cases, they incorporate a company in Sri Lanka. In certain cases, instead of incorporating a company, they come and register as a branch office or a liaison office. Right? As a branch office, general usage, we call those things as branch office, liaison office, and all. This buying office and all, maybe liaison office or branch office. That is general usage. The technical term under our Companies Act is overseas company registered in Sri Lanka, not incorporated. They are not incorporating. They are registering in Sri Lanka. When they register an entity in Sri Lanka, in Sri Lankan entity, there's no share capital. There's no stated capital, no. In Sri Lankan entity, there's no stated capital. When there's no stated capital in Sri Lankan entity, what's happening? Can't declare a dividend. For you to declare a dividend, that Sri Lankan entity should have a stated capital. Now, there's no stated capital. Now, in that case, only in that case, this remittance tax is set. Only in that case, not in any other case. Because for all other cases, there are separate withholding taxes. If 100% share in it, if it is an incorporated company in Sri Lanka, the 100% shares may be owned by foreigners, then we can declare a dividend. Then there's 15% dividend tax. If it is service payment, there are withholding taxes, 14% withholding taxes. The general payment withholding tax, service payment. Now, this remittance tax is applicable only in that case. Right? Overseas companies registered in Sri Lanka, not incorporated. Under the Companies Act, we call it as overseas companies. Understood? Right. Are there any other questions? Right. I'll give a little briefing on this withholding tax. After that, I stop because actually I wanted to continue till even till 8:45, but I think I managed to do this little early. Right? Give me a minute, please. We'll just read the withholding taxes. We'll see the withholding taxes. After that, I'll stop for the day because I have to rush now. Get ready and rush. Yeah. The withholding tax including APID to be deducted on payments. In the case of withholding tax, always we have to deduct on a payment. Payment. Right? Then when we consider a payment, it gives an idea, general idea, that we take money out of our pocket and give it to somebody else. Or we write a check and give it to somebody else. Or we get a bank draft and give it to somebody else. Or we log into our account and online transfer money. Those are the general meaning. But in the tax law, there's a special definition for the word payment. There's a special definition for the word payment. When we see this, the definition of payment, it is on accrual basis. Now there's a definition in section 195, which reads like this. It says, payment means the conferring of value, or a benefit in any form by one person on another person. Conferring of value. That means you are incurring the value, incurring that transaction, not physical payment. That is, this doesn't mean physical payment. No sooner you commit something, some payment, conferring a value, then it is considered as payment. Ultimately, by reading this, it is very clear. Even it says payment, it is on accrual basis. Now see, the payment, the word is payment, but the definition is on accrual basis. I think you can understand with this word, conferring of value or a benefit. Conferring of a value or benefit. It doesn't say physically making a payment. Now this has created havoc some time back when they reintroduced the withholding tax. Majority of our Inland Revenue officers were saying, no sooner you physically make a payment, at that time you have to deduct the withholding tax. Now some payments were relating to previous year, where the withholding tax was not there. And physically making the payment during the withholding tax period. Then tax officials were saying, even majority of our practitioners were arguing that is on, at the time we physically pay, you have to deduct. That is totally wrong. Now, they reintroduced the withholding tax on a date. Previously, there wasn't withholding tax. Then they reintroduced. Suppose some employees getting arrears salary relating to non-withholding tax period. even the payer who is making the payment subsequently can't deduct the withholding tax. Can't deduct. I know a lot of people in some semi-governmental institutions and all, they were deducting. Universities, then electricity board and all, they were deducting without identifying, without reading the definition of section 195. At last, for a professor attached to University of Peradeniya, ultimately IRD secretarial section gave a determination, some type of ruling, some type of explanation. In that, of course, they have explained this correctly. They have explained that it is on accrual basis, not on cash basis, and includes the transfer by one person of an asset or money to another person, or transfer by one person of a liability to another person. The creation of one person of an asset that on creation is owned by another person, or decrease by one person of a liability owned by another person. The provision of by one person of service to another person. Now see, provision. No sooner you provide it, you have conferred the value. That is accrual basis. It is very clear here. No? Then the making available of an asset or money owned by one person for the use of another person, or granting of the use of the such asset or money to another person. It is to be noted that with the above definitions, payment covers granting of right, which is different from the general dictionary meaning of the word payment. General dictionary meaning is remitting or giving settlement. That is not the meaning. Are there any questions? Yeah, are there any questions? Yeah, are there any questions? I can give little more time. If you have any questions, I can give little more time. Right. If there aren't any questions, now 8:35 the time, I have to get ready to go. Therefore, I would like to stop at this point. If now next 2 days, day after tomorrow and next week, Tuesday, Mr. Samandhi Sanayaka will cover his balance part of the lecture. From next week, Thursday, I will continue. Please come with more and more questions. Okay, I would like to thank everybody. Good night, everybody.
So enjoy your holiday.
night,
Have a
sir.
safe journey.
Thank
Good night, sir.
Thank you and bye.
you.